In this episode, we turn to a topic that sits at the center of responsible artificial intelligence, AI, governance, because it deals with how people are treated when systems help shape decisions that can change real lives. New learners sometimes assume discrimination law belongs to human managers, loan officers, landlords, and insurers, while AI belongs to software teams and data scientists. But that separation is far too neat to match the real world. When an organization uses AI to screen job applicants, evaluate creditworthiness, support housing decisions, or influence insurance outcomes, the law does not step aside just because a model or algorithm is involved. In fact, the use of AI can make non-discrimination issues harder to notice because the decision process may look technical, neutral, or objective even when unfair treatment is still happening underneath. That is why this lesson matters so much. If you want to understand how AI governance works in high-impact settings, you have to understand how non-discrimination law still applies, how unfairness can appear through both direct choices and hidden patterns, and why organizations remain responsible for the results. Before we continue, a quick note. This audio course is a companion to our course companion books. The first book is about the exam and provides detailed information on how to pass it best. The second book is a Kindle-only ebook that contains 1,000 flashcards that can be used on your mobile device or Kindle. Check them both out at Cyber.Author.me in the Bare Metal Study Guide series. A useful place to begin is the basic idea behind non-discrimination law. At a high level, these laws are meant to stop people from being treated unfairly because of protected characteristics in important areas of life, especially areas where decisions affect work, money, housing, security, and access to opportunity. The exact protected characteristics can vary across legal systems and across domains, but they often include traits such as race, color, national origin, religion, sex, disability, age, family status, and other categories that the law treats as requiring protection. For a beginner, the key point is that discrimination law is not only about obvious prejudice or hateful language. It is about whether systems, rules, and decision processes produce unlawful unequal treatment or unlawful unequal effects. Once AI enters the process, the technology does not erase those questions. It simply changes the pathway through which those questions have to be asked, investigated, and governed. One of the most important lessons here is that existing non-discrimination rules often apply to AI even when the law was written long before modern AI tools became common. Organizations sometimes act as if using software somehow transforms a human decision into a technical event with a different moral and legal character. But that is not how responsible governance should think. If an employer uses an AI tool to rank applicants, the hiring context still matters. If a lender uses a model to influence who receives credit or on what terms, the credit context still matters. If a property owner or screening company uses automation in housing decisions, or if an insurer uses a model to price, classify, or handle claims, those are still legally important decisions about people. The presence of AI may change the speed, scale, and complexity of the process, but it does not remove the duty to avoid unlawful discrimination. This is why a strong governance program treats AI as part of the decision system, not as an excuse that somehow sits outside the rules that already govern high-impact treatment of individuals. It also helps to separate two broad ways discrimination problems can arise. One path is more direct and easier to picture. A system may be designed or used in a way that explicitly treats people differently because of a protected trait or because of information that stands in for that trait too closely. The other path is more indirect and often more difficult to see at first. A rule, feature, threshold, or training pattern may look neutral on the surface, yet still produce unequal effects that fall much harder on certain protected groups without sufficient justification. This second pathway matters deeply in AI because many models are built from patterns in historical data, correlations, and proxy variables rather than openly labeled prejudices. A beginner should understand that discrimination law does not always wait for a person to announce a biased intention. Unfairness can be built into the system through the data, the labels, the feature choices, the optimization goals, or the way outputs are used in practice. That is where the idea of proxies becomes so important. A model may not use a protected trait directly and still reach very similar results through other information that tracks closely with it. Postal codes, school history, purchasing behavior, language patterns, work gaps, online activity, or even communication style can sometimes act as stand-ins for traits the law protects, especially when combined together in ways that recreate old lines of exclusion. Historical data can make this problem worse because many datasets reflect a world that was never fully fair to begin with. If past hiring favored certain backgrounds, if past lending patterns mirrored inequality, if past housing decisions carried exclusion, or if past insurance practices reflected unfair assumptions, then a model trained on those patterns can inherit them and scale them. That does not mean every model trained on historical data is automatically unlawful. It means organizations cannot assume that a model is clean simply because the code looks neutral. They have to ask whether the inputs and outcomes are rebuilding unequal treatment under a more technical appearance. Employment is one of the clearest areas where this becomes real for beginners. Employers may use AI to sort resumes, rank candidates, analyze recorded interviews, score assessments, predict job performance, detect attrition risk, or support internal promotion and discipline decisions. Each of those uses can affect who gets access to work, who advances, and who is pushed aside. A model that downgrades applicants with career breaks may burden caregivers more heavily. A system trained on past high performers may simply replicate the historical profile of who already succeeded in a workplace shaped by earlier bias. An interview analysis tool may perform unevenly across accents, disabilities, communication styles, or cultural differences. Even an apparently helpful screening tool can create legal and governance problems if it narrows opportunity unfairly or hides the reasons some applicants are repeatedly filtered out. That is why organizations cannot treat employment AI as just another productivity tool. Once the system touches hiring, promotion, evaluation, discipline, or access to work, non-discrimination law becomes a central part of the governance conversation. Credit decisions create another powerful example because access to credit shapes major parts of a person's economic life. A lender or financial service may use AI to support underwriting, set thresholds, detect fraud, rank applications for review, determine marketing audiences, or decide who receives better or worse terms. On the surface, these models may appear highly numerical and therefore less vulnerable to discrimination, but that appearance can be misleading. Credit models can reproduce inequality if they rely too heavily on variables that track social disadvantage, if they reflect biased historical approval patterns, or if they are deployed in ways that give some groups fewer chances to be seen as creditworthy in the first place. A person may never know that a model weighed certain patterns against them, and the institution may struggle to explain the outcome if the process is poorly documented. This is why AI governance and credit settings must pay close attention not only to accuracy and fraud control, but also to whether the system creates unfair barriers, opaque decisions, or patterns that burden protected groups without adequate justification and review. Housing is equally sensitive because it involves access to shelter, neighborhood opportunity, community stability, and everyday dignity. AI can enter housing through tenant screening, fraud detection, advertising, waitlist management, rent-setting support, identity verification, property recommendations, or systems that prioritize maintenance and service responses. A tool that seems efficient in this space can still become discriminatory if it screens out people unfairly, steers different groups toward different housing options, or uses data patterns that act as stand-ins for protected characteristics. Even targeted advertising can raise governance concerns if some populations are shown fewer opportunities or different categories of housing based on patterns that map onto protected status. Tenant screening tools are especially important because they can combine credit information, prior housing history, behavioral signals, or other data into a score that feels objective while hiding unequal impact. In housing, the harm is not only financial. It can affect where people live, what schools their children can reach, what jobs are accessible, and whether they are given a fair chance to secure stable housing at all. Insurance can be harder for beginners because some forms of classification are built into the business model, and not every difference in treatment is automatically unlawful. Insurance often involves pricing risk, estimating loss, detecting fraud, managing claims, and deciding eligibility or coverage terms based on complex data. that can make it tempting for organizations to treat AI classification as naturally acceptable as long as it improves predictive performance. Yet non-discrimination concerns still matter because the model may rely on patterns that burden protected groups unfairly, use proxies that recreate old exclusions, or make claim and underwriting decisions in ways that people cannot meaningfully understand or challenge. A system may not mention a protected trait directly and still treat some groups worse through geography, shopping patterns, health-related indicators, language, or other correlated signals. Insurance also illustrates a broader lesson for governance. The fact that a domain allows some risk-based distinctions does not mean every distinction created by an AI system is safe, fair, or legally defensible. The organization still has to examine whether its model is using data and producing outcomes in a way that crosses into impermissible discrimination. Several common myths make these problems worse. One myth is that AI is objective because it is mathematical, and mathematics feels cleaner than human judgment. In reality, a model is shaped by data choices, label choices, feature choices, threshold choices, optimization goals, and business decisions about how the output will be used, all of which are made by people and institutions. Another myth is that using a vendor moves the problem outside the organization, but responsibility does not disappear because a third party supplied the tool. A third myth is that keeping a human somewhere in the process automatically solves the legal issue. Human review only helps if it is meaningful, informed, and empowered to question the model instead of merely approving what the system already suggested. A fourth myth is that a model is safe if it avoids direct use of protected traits, even though proxy variables and historical patterns can still recreate the same unfair effects. Good governance begins by rejecting these myths and replacing them with a more honest view of how discrimination can enter technical systems through design, data, and deployment. Because these decisions can shape people's lives so deeply, explanation and documentation become especially important. If an organization cannot explain what a system is used for, what data categories matter, how the output fits into the decision process, and what review exists around it, then it will struggle to show that its treatment of people is fair and defensible. This does not mean every individual must receive a full technical description of the model. It means the organization should be able to identify the purpose of the tool, the business logic behind its use, the key inputs and limits that matter for governance, and the route through which a person can seek further review when appropriate. Documentation also helps the organization itself, because discrimination problems are often easier to detect when teams have clear records of what data was used, what tests were performed, what thresholds were chosen, and what changes were made over time. In high-impact areas like employment, credit, housing, and insurance, unclear documentation is more than an operational weakness. It can become evidence that the organization never fully understood or controlled the system it was relying on. That is why testing and monitoring are essential rather than optional. Before deployment, organizations should examine whether the model behaves unevenly across groups, whether certain features act as risky proxies, whether the labels used in training reflect old bias, and whether the use case itself is justified and appropriately narrow. After deployment, the work continues because a model that looked acceptable in a pilot can start behaving differently when it meets real applicants, real borrowers, real tenants, or real policyholders at scale. Monitoring should therefore look for complaints, drift, unexpected disparities, misuse by staff, changes in the population being evaluated, and signs that the model is being trusted more heavily than intended. It should also include a clear process for pausing, narrowing, or reworking the system if the organization sees evidence that the outcomes are becoming legally or ethically unsafe. Non-discrimination law is not something a business can satisfy once and forget. In AI settings, it requires ongoing discipline because the system and the surrounding workflow can both change in ways that increase the risk of unfair treatment over time. When organizations discover a possible discrimination issue, their response matters just as much as their preparation. A weak response treats the issue as a public relations problem or a technical bug to be explained away quickly. A stronger response asks whether the model should be paused, whether affected decisions need to be reviewed, whether the data or use case needs to be rethought, and whether individuals need a clearer route to human reconsideration. It also asks whether the problem came from the model itself, from the workflow around it, from a poor training set, from threshold choices, or from staff over-reliance on the tool. That kind of investigation is important because unfairness can appear in more than one place. Remediation may require retraining, narrowing the use case, removing risky variables, rewriting policy, improving notice, changing vendor arrangements, or ending the use altogether if the system cannot be governed safely. Responsible organizations understand that finding a discrimination risk is not merely a technical embarrassment. It is a warning that the system may be harming people in ways the law takes seriously and governance must address directly. As you finish this lesson, keep one simple framework in mind. Non-discrimination law still applies when AI is used in employment, credit, housing, and insurance because the technology becomes part of decisions that affect work, money, shelter, and protection. The central legal and governance question is not whether a model looks advanced or neutral. It is whether the system produces unlawful unequal treatment or unlawful unequal effects, whether directly or through proxies, historical patterns, and poorly governed deployment. In these domains, organizations need to define the use carefully, test for unfairness, document the logic and limits of the system, monitor outcomes over time, and ensure meaningful human accountability remains in place. Once you understand that, the deeper lesson becomes clear. AI does not create a new world where old principles of equal treatment stop matching. It creates a more complex environment where those principles must be applied with greater discipline, better evidence, and much more honesty about how technical systems can shape human opportunity.
Thanks for listening. For more audio courses, daily newsletters, and more, please visit baremetalcyber.com.